Hey, what's up, everybody? Welcome to the live stream, or if you're new, watching at a later date, this will be known as Keith Condensed, basically a little cutout of the live stream that I just pull out and kind of put back up online. So that way, everybody can kind of stay informed of what's going on in the market. Typically, these videos might be uploaded about 3 to 4 days later than the actual date. So, hey, that's what you get for missing the live stream, right? Anyways, let's go ahead and jump into it. So this article comes from The Street. The title of the article is "Investors Have Learned Squat 10 years after the Lehman Brothers bankruptcy." So basically in 2008, on September 15th, the Lehman Brothers went bankrupt. And I guess this was like an iconic, again, to kind of like preface this real quickly, I wasn't an investor in 2008. I was barely finishing up school, barely finishing up, to be more specific, high school. And then actually at this point, I was just starting to go to college. I should have been taking the money that I was getting in loans and probably investing it into the market. I should have been an investor in 2008. And a lot of people would be like, "Yo, coach, you a genius for investing in 2008. How'd you know?" And I'd be like, just kind of wanted to invest my money back then, but I couldn't invest it because I didn't have enough to invest. Because there wasn't things like Stash, Acorns, Robinhood, M1 Finance. So basically in the article, he was getting at, it's about a Wall Street analyst who is kind of just reminiscing about what had happened on September 15th, 2008. And he was saying, he was like, basically, you hear every single day, you hear everybody talk about it, long-term investors, short-term investors, buy low, sell high, buy low, sell high. He was like, well, this day was not the buy low, sell high kind of day. Like, he was like, I've seen big drops before, and we always just kept on buying those like dips. He was like, but this day was not a buy low, sell high kind of day. He was like, this was it's going to get lower and sell as much as you can, get out as fast as you can. And basically he gets to the point where he was talking about how like he was so frustrated, so emotional that he just wanted to like pound his head against the like table, as what I think he alluded to. And so he went out to take a walk, just a walk down Wall Street. And he was like, everything was normal. Like, people were taking pictures, people were strolling, people were talking, just like they normally would. However, what they didn't realize was that there was basically an economic crisis. And it was like nobody knew about it. Like, he knew, but like everybody else in the public was like, this guy's just kind of weird. Like, I mean, I'm sure that he was walking around normal, but it was kind of like one of those things, like nobody knew what was happening to the economy. Nobody knew what was happening to their investments at that like time. Like, literally the market had just dropped, and it was like, he was like it's time to wake up. Like, how do you guys not know about this? And so anyways, he gets further down into about how we've pretty much as investors have learned nothing from what happened in 2008 with the financial crisis that had happened there. Basically, he talks about how we don't take time to go and look at companies' financial statements, learn how to read a cash flow statement to see if a company is actually a viable company and something that we should be investing into. We typically invest off of momentum, off of hype. And in here, he also talks about leveraging. He said, nobody's really leveraging right now. I mean, they're starting to. He's like, but if you think about it at the general population level, I think in here, let me find it real quick. Yeah, just take a gander at the consumer credit data and 2 years of strong home remodeling demand fueled by low interest rates. So people are leveraging their basically investment into their house. So they're taking on debt, leverage to reinvest that back into their house, hopefully to, increase the value of it. And then second of all, retail sales have come on strong too. As people consume the hottest tech gadgets and jeans, most tech stocks have gone through the roof without any consideration on valuation. People are simply riding momentum because everyone else is, and they don't know how to read a cash flow statement. And I like personally, like this, when I read this, like it kind of makes my brain hurt. Like it really does. Like, it doesn't make sense because I'm like, how could you invest into a company solely on like speculation and no factual information? Like, it's just like, hey, this stock looks like it's getting momentum. Like, we're going to go ahead and throw our money in it. And it's like, yeah, we made money. Like, great, thumbs up. Like, for sure for you. But it's like, then it drops and you're like, wait, the momentum shifted. Like, what happened? All in a day's work. And so I think, like, as an investor, it's important to, I guess, open up some books and start trying to figure out how to read cash flow statements, start figuring out how to read financial statements, start figuring out what makes a stock, what makes a company a good company, and what makes a company lasting company, maybe for the next 10 to 15 years. What makes a company a recession-proof company? I would say those are all good things to consider. And if you don't have the answer, then gosh, you probably should go figure out those answers, right? I hope that some of my videos will help you figure that out, but for the most part, you got to continue to do your own research and really, really leave no stone unturned. I think that for me, like, I guess when I hear this, like, I don't think that I necessarily learned from the 2008 Lehman bankruptcy because I wasn't around in investing then. And so for me, I would have to go back and look at how that all played out. And emotionally, I wouldn't be filled by the same emotions that existed at that point in time. I remember one of my buddies talking about it. He was like, guys were walking out of work because their 10K or their 401k had basically dropped so much. And they were like, I literally, like, he's like, I've seen grown men I saw grown men cry in 2008. And it was like, he was like, what the heck? Like, they just got up and walked out and they said, forget this. I don't know if I'm coming back. That's all I got to say. Like, as emotional as it gets, like, I don't know what that is like, but I guess I could go from the logical side and program some rules, some principles in that could take what happened in 2008 and apply those principles from 2008 to my account, maybe to set me up moving into the future. Anyways, it's your boy, Coach Keith. Thank you for watching. I really appreciate it. Peace out.